So it was finally the year end and you got a big bonus. Congratulations. But when you open up that check and you look at the amount that you got, it might be shocking to see that you did not get as much as you thought. In this video, guys, we're going to be talking about the taxes when it comes to bonuses. I know a lot of people do get them at year end. A lot of people get them early January, but it's kind of crazy how they can tax bonuses a little bit different than your ordinary income. Now, does it look smaller than expected? Again, that is what a lot of people think. And that is the reason Uncle Sam does kind of tax it differently when it comes to bonuses, depending on your tax bracket, depending on your normal income. Why does it seem a little bit high? Now, majority of companies tax at a 22% federal rate. That is right, guys. If you get a $10,000 bonus, 2,200 of that is going right to your federal rate, regardless of what tax bracket you fall in. And again, this is just most companies. It looks like a big number. Now, of course, there are a couple different things and a couple caveats to this, again, that we're going to kind of get into in this video. So many taxpayers fall into this group. 2023, roughly 49% of individuals fell into, or 81 million fell into the tax bracket of that 22% or below. So if you're 50% of those Americans that fall below that 22% tax bracket, you're getting taxed more. Now, you do get some of that tax back at the end of the year when you go ahead and file your taxes. But overall, when you look at 2023, it includes individuals with a taxable income up to $44,000, married couples up to $89K, which are going to fall in the same tax category. Now, in addition, guys, when it comes to your bonuses, not only being taxed at 22%, there can be additional taxes withheld depending on state and local taxes. So again, you can be taxed at the federal level, then you can be taxed at the state level, then you could be taxed at the local level, depending on where you live. For example, if you live in California, you would have to withhold 10.2%. That is right, guys. California's state rate is 10.2%, meaning residents in there, if you're getting a bonus, right off the top, 32.2% is gone with state and federal combined right off the top. So again, you got that $10,000 bonus, $3,200, boom, gone for taxes right off the top. Even if you're under that 22% bracket, you are still getting hit with that 22% bracket. Now, in addition to this, you could be subject to Social Security and Medicare taxes. Social Security is 6.2%. We have Medicare coming in at 1.45%. So right there, guys, is another 7.5% of that bonus gone, which again is kind of crazy to think. So now we're up to almost 40% before you get the bonus. So again, when you think about that $10,000 bonus, boom, 40% of your bonus is gone. That goes right to covering your taxes, which means your $10,000 bonus is now a $6,000 bonus. So very quickly, individuals do find that 40% of this bonus is gone. Now, in addition, guys, employers that are paid a bonus of $1 million, now wouldn't that be absolutely crazy to think about? If you are paid a bonus of over $1 million, you are subject to a 37% flat tax, where you can be, or other individuals could be, taxed at a 40% rate, depending on exactly what you have to pay. Wait a minute. So the people that are getting over $1 million are getting a little bit of a tax break? Yep, that is right, because they have a flat tax withholding, which is kind of crazy to think. That is the benefit, guys. But guys, looking at this in the year-end bonuses, companies can also have a second option. So they do have the option when it comes to bonuses. Instead of issuing a separate bonus check, which I know a lot of companies do issue bonus checks separately, they can lump bonus checks into your typical paycheck. So they can literally just put it as a line item. This would give you a bigger bonus up front because you would be taxed at the regular income rate that you are there. So again, it would be a little bit different, guys. Instead of being taxed at that 22%, regardless of where you're at, they would know your tax rate and they would tax you at the appropriate tax rate, meaning that you would have more money in your pocket. So what happens at the end of the year, guys? There is a silver lining or a light at the end of the tunnel. If you are taxed at that 22% bracket for your bonuses, when you file your taxes, when you file your tax refund at the end of the year, if you fall in, the 12% bracket or the 18% bracket, they're going to give you a much larger refund. Now with this, guys, of course, you are paying Uncle Sam or paying your taxes up front just to hopefully get a rebate when you actually do your taxes when they're filed by April 15th. Now, of course, this works opposite for those 50% that are over that tax bracket, guys. If you're in a 24, 32, 35, or 37% bracket, you will end up owing the IRS anything because you were only taxed at that 22%. That was the flat rate that you were taxed. So if you fall into, let's say, a 32% bracket, not only are you getting taxed on the 22 you're bringing home, you're going to have to pay another $1,000 back in to hit that 32% bracket based on the $10,000 that you have. So it's kind of crazy, guys. So in addition, larger bonuses can push you into higher brackets. This is something that you have to keep in mind, guys, that if you have sales income, if you have very high lucrative bonuses where you work, this can actually push you over when you do get larger bonuses. So let's say you get a bonus of 200K. This will push someone that is in a 32% bracket to a 35% bracket, meaning not only with our progressive tax system, they're going to have to pay more going into that new bracket, and every dollar they earn in that new bracket is going to be taxed at 35%. But the flat tax that you got on that 200K was only at the 22%. So you're going to have a lot of either tax deferment or a lot of taxes to pay at the end of the year, because right off the bat, if you move into that 32% bracket, you're going to owe a lot of money on the 200K that was already earned in addition to your regular income. So does it seem fair, guys? Does it seem right? Let me know in the comments what you guys think about it. And if you like the content that I'm putting out there, guys, definitely consider subscribing to the channel. In my opinion, guys, it seems like it's just makes it kind of easy to go ahead and tax it at a flat tax of 22%. Because if you think the majority of population is, if the majority of the population falls below that 22%, Uncle Sam is holding millions, if not trillions of dollars in tax revenue from these bonuses until people actually file their taxes and they claim it. Let's say you don't file your taxes, it's delayed, whatever should happen. You're not going to get your money back, guys. They already have your money and they already have your money up front. So again, if you're looking at the bonuses, if you're looking at some of the higher bonuses, make sure that you're setting aside money to pay those taxes, because again, they are going to come due, guys, and they always come due. Unfortunately, we have to pay quarterly taxes where I live, which is kind of crazy because of income and things of that nature. But definitely when you get those year-end bonuses, the taxes seem a little bit higher, your bonuses will seem a little bit lower. And that is why, guys, because if you're normally in a lower tax bracket, as soon as you get that bonus, it's going to be hit right off the top with that 22% rate. And it's going to make a big difference on how much you're actually bringing home in the paycheck. So again, guys, that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.